Hi everyone, this is Christian here on YouTube and welcome to this brand new video for the channel. In today's video, I want to show you the best price action strategy for beginners, and I'm going to show you how I turned all this mess into these profits. And basically, because many people have been asking me like to make a video and teach you what is it that I analyze in the market before I actually place a trade. So this is what I'm going to do in this specific video. This video is specifically for beginners. So if you're very new in day trading, this is something that you got to watch. So if you're new to my channel and you're into day trading, my name is Christian and I do daily videos in regards to day trading. So if you're new here, consider subscribing and activate the notifications bell icon so that you get a notification every time I upload a new video. That being said, let's jump into the content. All right, everyone. So before I actually jump into this video, if you guys remember, I usually post 2 videos during the day, but from now on, I'm actually just gonna be posting 1 video. That video is gonna be longer than usual because I actually want to put some more time into the videos that I'm actually uploading. So I'm gonna take more time in 1 video instead of posting 2 videos. So right now, from now on, every video will be posted every day at 14 GMT over here on my YouTube channel, 7 days of the week. So in case you guys want to learn more about day trading, you can rest assured that every day there's going to be a video in this YouTube channel. From now on, well, right now in this specific video, I want to talk about price action. And for this, I'm actually going to choose a pair USD CAD. And I'm going to teach you what is it that I look at when I'm actually looking for trades to actually take. This is a moving average in the period of 150, and that's not the one what we want. We want the one with a period of 50. And this is what we are supposed to be looking at. And let me go ahead and choose another one because I don't want to ruin the settings that I already have over here in my pair. So these are the actual, this is the actual chart that I usually look at. I usually place swing trades, which are from either 3 to like 10 days. For instance, these ones right here that I have opened at this specific moment, I opened them on, let me see, on August the 8th. No, August 7th, and I'm recording this video on August the 18th. So it's been 11 days ever since these transactions were actually opened, and this is the type of price action that I usually do. However, this specific price action that I'm going to tell you right now can be used for 1 hour, 4 hour trades, but definitely the amount of pips probably will be different, and you need to be aiming for 3 times more when you actually hit the stop, the take profit than the stop loss. All right. So if you are aiming for 75 pips and take profit, then your stop loss should be around 25 pips. Okay. Hope that makes sense. And so the first thing we're going to do is actually that one, put the moving average on the period of 50. You can actually go to indicators and type in moving average, and it's going to pop up this one. I use the simple moving average. Some people use the exponential moving average. It really doesn't make that much of a difference, since basically what we're looking at is not entry points with this specific indicator, but what we're looking at is for trends in order to know what direction we should enter the trade with. So whenever you see that the moving average is going up, it's usually an uptrend, depending on the actual incline manner and the actual far away from the candlesticks. That's how strong the actual uptrend is. And whenever it's going down, it's actually a downtrend. So it's very simple to understand. Like I said, I'm actually looking at a daily chart, but if you jump into 4-hour chart, you're gonna see different movements in regards to it. Take a look at it. This is a downtrend. It's been a downtrend ever since March the 27th, 2020, and it has been a downtrend. But what you got to be looking at is the change in directions or the retracement, as they call it. and this specific strategy. So what you're going to be doing is, first you're going to draw a horizontal line, and you're going to find a strong support and resistance level. So I'm going to do it with the 4-hour charts so that you can actually apply it for day trading. Okay. So what you do is that you actually draw this. This looks like a good support line. It was a support line. It got broken and it became a new resistance line, right? You can actually find another one that is strong. Maybe this one right here. It's another support, and it was a support line. It got broken, and then it kept on jumping. So then it broke again, and it became a resistance. So what you got to be looking at in this specific strategy is very simple. You need to look for the direction of the actual pair, and then you look for breakouts. So whenever there's a downtrend, usually the breakout comes along with a sell option, with a buy option, I'm sorry. So for instance, if you actually go in here and enter for a buy position, let's say in this area, you enter for a buy position here, then you can see that in this specific trade, you were making around 98 pips. And maybe you thought it was going to be further away, or you took your profits on whatever, and then you actually set up a new trade in this area where you were supposed to, the price is supposed to start jumping because it's a support line. However, since it's a downtrend, then this is likely to be broken. The support line is likely to be broken. So what happens here is that instead of making 98 pips, it dropped all the way to 100 pips pretty much. So what you got to be doing in this specific point, or in this specific strategy, is actually looking for the direction of the trend, and you're going to look for breakouts in order to enter that trend. So for instance, right here, you can see that this was a good resistance level. So this will be respected. This will be respected once it got broken, and you can see that it actually just started jumping right here, but it respected the new resistance level right here. And maybe even if you missed it, then there's going to be a new opportunity to actually enter. So you can enter in this area right here and take a look. Once it actually touches and start dropping in this area, you can even close right here around 198 pips, or you can let it go further away, 277 pips. So this is what happens when you actually go with the trend. Okay, right now we're going to look at a different trending opportunity in order to identify these opportunities on an uptrend. This is kind of an uptrend. If it's not that hard. So let me go ahead and find one. Okay, this one looks actually way better. So take a look at this one. When you actually take a look at the support and resistance line, obviously you need to look backwards, right? Because you don't know what's going to happen in the future. So what you do is that you actually look backwards, and you're going to realize that this, for example, it was a support line, and the resistance line, when it's an uptrend, are likely to be broken. So you could have entered for a sell position here, and let's say that you already made around 199 pips in profit. But what happens if you want to enter the trade right here again? Because you thought, okay, this is a good resistance line, so I'm going to enter this level. Or let me go ahead and move it, because this one looks way easier to identify. There you go. So you entered this position and you made some money. Then you want to enter in this position as well. And what happens? That it continues to go on the trend. So instead of actually making 200 pips, you actually lose 344 pips. Obviously, you have your stop loss set for this trade, but it's a losing trade. That's basically my point. So what is it that you do instead? And this is the opposite, of course. Whenever there's an uptrend, you actually enter for a buy position. Okay, so you enter for right here. If you notice right here, there's a buy entry. And why? Because this was broken right here. So once it gets broken and the candlestick finishes their time frame, but it broke the resistance or the support line, then the pair, it's likely to continue going in that same direction. And here is the extra confirmation. The uptrend moving average that we have right here that identifies that there's an uptrend right here. It's what tells us that this price will start to jump from this new support level. Now, in this specific trade, we could have made gain over 300 in pips just because we actually follow the trend. Right now, I'm gonna try to identify one entry point so that you can actually understand this specific strategy. Obviously, when you're watching this video, it's more likely that you're not going to be looking at the same prices, but to me, it's super important that you understand how to actually place it on a current pair. Okay, so look at this. This is a strong resistance line, support line right here. And this is going to be broken. That's 100% sure that is actually going to be broken in this area. So this is a good entry point. Why? Because if you notice, this is becoming a downtrend right now. Remember, when the actual moving average in the period of 50 is above, it's a downtrend. And when it's below, it's an uptrend. And we can take a look at that. This has been like kind of a downtrend for a few weeks, yeah, pretty much. And one thing you can do in order to make sure that this is going to be what I think it is going to be, or what you think is going to be, is this right here. You actually enter for a daily chart and take a look at what's the trend on a daily chart. And if you notice, there are 3 bearish candles during this week. Today's Tuesday, and the Friday bearish was actually in red, and the new ones, the Monday and Tuesday, are actually in red as well. So what that tells you is that it's a strong downtrend. And if you can see right here, it has been a downtrend ever since, I would say, what was the latest? Well, take a look at this. Well, let's ignore this uptrend right here, and it can start right here in January 31st, 2017. So it's more likely that it's going to be broken. It's going to get to this level. And if we measure it right here, and if we enter right now, we're taking a look at least 74 pips in profit. I would say that's even more. And this is one example of a trade that I identified myself. And if you can see USD/JPY, I have it as a sell option because I made this analysis and basically I follow my own direction, and that's exactly what I did. So make sure, let's go ahead and do a small recap in regards to this specific strategy. First, make sure that you drew your moving average with a period of 50 so that you identify the trend. Number 2 is that you find a strong support and resistance level inside of the actual pair in 4 hours in a daily candlestick. Both of them are actually good. And once you actually find them, depending on the trend, if it's an uptrend, then you're gonna look for buying opportunities whenever the resistance actually gets broken. And if it's a downtrend, you're gonna look for sell opportunities whenever the support gets actually broken. So I hope this strategy really helps you guys out. If you guys want to learn a lot more than this, make sure you are subscribed to this YouTube channel. I try to share my tips every single day, so make sure that you are subscribed to the BLW Online Trading channel. And thank you for watching this video. If you enjoyed the content of it, make sure you smash the like button. And more importantly, if you have any questions, you can put it in the comment section below. I'll go ahead and answer your comments in the comment section below. Thank you for watching. I'll see you on the next one.